Hey, good morning, everyone. This is Paul with Forex Smart Trade. Glad you could all make it here. Hope you all had a terrific Memorial Day weekend. Our goal is to help you become the best version of yourself, and we do that by helping people become financially independent by teaching them how to currency trade with our proprietary indicators and best in the business training. With that, let us proceed. I am supposed to read the disclaimer. This trade is for educational purposes only. All information given is speculative and involves risk. This trade should be examined and taken from a personal evaluation. All attendees agree by watching that any trades he or she takes was of individual influence based on personal evaluation of the market. This webinar's intention is to demonstrate a method that can be used to help make an evaluation of the current market. No past, present, or future incomes have been made or relied upon during this meeting. All right, the two techniques we're going to use today are something called the thick orange line trade and the 10-point trade. We focus on those because those are what are taught in the introductory sessions, so everybody kind of has a handle on them. And generally, I'll only use techniques that come through or that we discuss in the introductory session. Again, the way to become better is not only to attend this webinar, but to attend the other webinars that the company has. Later this morning, there's an LIT webinar. For those who are brand new, at 9:30 a.m. Eastern Time, I would suggest going to this. Tonight at 10 p.m. we have the AIT, which is the Australian impact trade. For those who are in coaching or beyond, at 10 a.m. there's the MIT trade. Tomorrow, again, the LIT at 9:30 in the morning. We have a light member meeting at 9 p.m. Eastern Time and an advanced member meeting also at 9 p.m. Eastern Time. You will get the email for that. And again, those 10 o'clock trade with Brett. You should try to go to it and copy the trade. Brett will be doing some. His analysis actually goes a little bit beyond what is taught in the introductory course, but copy the trade, and he's very, very accurate. All right, so that's that. I like to work off of a routine. Start of my routine is a review of yesterday's trade. In our case, it was a week ago, so let's pull it up and take a look. Last week we found 4 thick orange line trades, and all 4 closed. So that was a good day. Only thing, we reduced our lot size by half because we saw that there were more than one opportunity to trade, so that we didn't put too much stress on our margin account. Next step is we want to check and see what kind of news is coming up. So let's do that. Forexfactory.com. Forexfactory.com. Today, Forex Factory breaks down currency news into kind of 3 different levels of information. A yellow, which means low impact, an orange, that means medium impact, and a red, that means high impact. If we see a high impacted item, we want to stay away from trading that. And the reason we want to stay away from trading that is because it's expected that whatever that news is going to impact the market. Our indicators are primarily technical in nature. That is, they're price action based. They follow moves in the market and are very good at picking when turns are going to happen. With news, we can't predict how the news is going to impact things. So when we see a news item, we just want to stay away from it. And as we look through today, most of them are low or medium impact until we get tonight. There's some news on the Canadian dollar and then again the New Zealand dollar. So none of that's going to impact anything that we do this morning. Some people have asked me when the best time to trade is. Generally, I believe it is in the morning of whatever the market is that you're trading in. If you go to market 24H clock, market 24H clock, right up here, this has a market clock. This tells you when it is morning in different time zones. So right now, everything orange here is morning time, and we're kind of 4 hours into the morning. And you'll see in another 3 hours, we will hit morning time for New York, and that there's this overlap here of between London, Zurich, Frankfurt, and New York. So this clock will help you figure out when it's morning in certain markets. All right. Let us start with the 10-point trade. And then as it gets closer to the top of the hour, we will take a look and see if there are any thick orange line trades. I always want to check, make sure I've got green up here, which means I'm connected to the internet, and that I have green down in this bottom right-hand corner, which means I am looking at a current live chart. As you saw a second ago when I first pulled it up, it was red. So red means I'm looking backward somewhere in time, so I always want to make sure that I'm green and green. On the thick orange line trade, we start with the majors and minors, and I am looking to see if the market's oversold or overbought. So in this case, I am overbought. I've got the lines pointed down, and I've got a double cross, red crossing over and black crossing over the top of gray. So I've got 3 points here. Point number 1 is that it's above. Point number 2 is that they're pointed down. Point number 3 is that I've got a double cross. If I have 3 points here, I am then going to pop up to the TNTs. And I want to count how many lines are moving in the right direction. So here, the 2 orange lines are going down. The thick and the thin, and the dotted blue is going up. When blue goes up, that means down. So 3 of the 4 are telling me down. So I've got 3 out of 4 here, 3 out of 3 here. So now I'm going to look to the pressure. I've got up pressure, but red is crossed on top. With red on top, I get a point for that. So I have 7 points here. 7 points. This looks like an interesting trade. So what happens when I have 7 or more points? And I'm going to look at the full chart. The full chart, I want to see what is going on. So here's the 60 that we just looked at. My 30 minutes, I've got a bigger gap here with red on top. Starting to roll. The majors and minors are coming down. I've got 3 of the 4 here, again telling me down. I am oversold. I've got down pressure. On the 120, I've got a double cross and people starting to go down, but green is on top here. So in an hour or two, I'm going to expect this line to look like this line where red is crossed over it. Now I want to take a look at where things are. I am right in the middle of a channel. I've got good distance between this resistance. I got about 8 pips till the top. I've got 13 pips, 11 pips down. I am trading into a up channel, trading into an up channel the last day and a half. So I've got a good 10 pips down, but market is going up. We have had a big up move. You can see from really since the start of the market, it went up and then it shot up some more, just to give me an idea of how much up we have had. This is a Fibonacci. We don't teach you this in the introductory course, but this is good at predicting how much retracement there'll be. So usually when you've had a big up move like this and it stopped, there'll be some retracement. So I would expect it to come down to here. So with that, oops, let's see. We got about 8 pips till we hit this line. Let us go ahead and take an 8 pip sell on the Euro USD dollar. So to take a new order, I pull up my chart, click new order. My volume, I've got the right pair. I'm going to look at how much I have in my account and move the volume, move this decimal place over 4 spots. So this is a demo account. So 1, 2, 3, 4. I'm going to take 0.85, 0.85 market sell. I am then going to, you see it's recorded the transaction down below the chart here. I gave it an order number, a time, what I did, and the size, pair, the price I got in at. I'm going to modify this. And we said this was good for 8 pips. 8 pips equals 80 points. And for my stop loss, I'm going to just go back and take a look. Normally, we would tell you to take a 4-time stop loss. So if I took 8 pips, it would be 320. But I like to do it off of the chart. So let's take a look here. I am going to come down. I'm going to come down below this red line and put my stop loss. So I'm going to go at 109.1002. 109.1002. I want it to break two resistance levels. It's going to break this guy, and it's got to, oops, we're going the other way. So let's go where we've got a sell. So I want him one. I'm going to go up here. 10.017. He's got to break this line, and he's got to break this line. And then if he breaks both those lines, I'll get stopped out. So 10.017. So I'm going to go back, edit, modify, and then I'm going to change this to 10.017. So I'm a little more aggressive in my stop losses because I don't like to give money back if I can avoid it. And with the euro dollar, I'm pretty confident in how it moves. So I think we're good there. So let's go see what else we have for a trade. We have another 10-point trade with the Great Britain pound USD. Market's oversold. Everybody's pointing down. And I've got the double cross. So I've got 3 of the points here. Difference between what we see on the pound dollar And what we see on the euro dollar is this guy, euro dollar, is more steep. The lines are coming down in a more steep angle than here. So I like this guy a little bit better. It seems like with all the U.S. pairs, we have this. So I want to see what else we have where I see a steeper line here. Because the steeper line is got a higher chance of closing. So we have the same on the euro dollar, excuse me, Australian dollar. Dollar Swiss franc, I've got a little bit of a steeper up pull. So I've got 3 points here, 4, 5, the 2 orange lines going up, the dotted blue coming down. So I got 3 out of the 4 here. The thick orange line is the fastest of the indicators. The thick blue line is the slowest, so I'd expect him to turn last. This guy's going a little bit sideways now. He's not quite as steep as he was before. And now he's actually he's going flat. He's going sideways. So I'm going to hold off. My next step would have been to actually go to the detailed chart for the USD CHF. But since he's gone sideways, I'm going to hold off. Dollar yen not going up yet. US Canadian not going up yet. Let's go to the next pair. Oversold. Euro pound not going up. Australian yen going sideways. He's not going down enough. Euro Canadian, it's in the middle of the channel beyond the halfway, so I'm going to hold off. Australian New Zealand dollar still going down. New Zealand US dollar still going up. Euro Australian dollar not going up yet, still going down. So let's go to the next group. Australian Canadian. Overbought, everybody's going down, double cross. All right, so I like this. These two orange lines going down, thick blue going, dotted blue going up. So I've got 3 of the 4 here. I've got up pressure with red on top. So I like that. Let us open up. Open up a new chart. I'm going to just save this one. And to make the new chart, I'm going to right click, go to chart settings, and I'm going to change the pair. And what was that? Australian. I write it down. If I don't write it down, I don't remember it. Australian Canadian. Australian Canadian. Australian Canadian, okay, apply, and it will change all of my charts. And I'm going to save this, save as, and I'm going to rename it AUD CAD. D stands for Daylight Savings Time. All right, so here's the signal again. On my 120, everybody's going down, but green is on top with up pressure. So in a little bit, I'm going to expect this line to start looking like this line. I've got 3 of the 4 up here telling me down. I've got everybody overbought coming down over here. On the 30 minutes, I've got majors and minors going down through the channel and the pressure rolling. On the 5 minute, I've got us overbought with sideways pressure let me see what the support and resistance looks like. So I'm going to crunch this up. Support and resistance helps me figure out where there's natural spots where the price seems to stop. So I am looking for spots where it seems to naturally stop. So right in here, it's naturally stopped. It stopped here. It stopped here. Same here. It's stopping all along here. These lines tend to be about 30 pips apart, and we're at 38 to 71, which is about 30 pips. So let's go up here. All right, we are the last day. It's been an uptrend. We're starting to see some retracement. I've got, I have 5-6 pips up and 17 pips down. With 17 pips down, we're trading into an uptrend. This would be good for 10 pips down. So let's go ahead and take this for 10 pips down. AUD, CAD. So I'm going to open my chart, file, new chart, AUD, CAD. I'm looking here. I don't see it. AUD, don't see it here. AUD, CAD, here it is. I have templates, so I am going to go ahead and take a sell trade, so new order. My volume is okay, 0.85 based on the size of my account. You can see my margin level over here is at 1,845. When I take this next trade, it's going to bring it right down to a little under 1,000, which is all right. So I'm going to do sell by market. It's recorded the new trade. I am going to right click on it along the new trade, and now I want to add in my stop loss and take profit. We said this was good for 10, so I am going to 10 pips is going to be 100 points, and I am just going to put 400 in here for now, and the reason being is it hasn't really traded. If you remember, when we looked at this, it hasn't traded up here for a long time, so I'm just going to take the 4. We're kind of at a recent high, so I'm going to just go 4 times where we were. So AUD, CAD, sell, take profit of 0.1978 with the stop loss of 0.92279. Now we got 6 minutes till the top of the hour. Let's go ahead and see if we have any thick orange line trades. So I'm going to go back. So on a thick orange line trade, this is a different signal. So I'm looking at different things. So here I start with this number. This is the scale of what the thick orange line number is. When it's as high as it can go, it's at 0. When it's as low as it can go, it's at minus 100. So I want it within 10 points of either end. So minus 59 is a no. Minus 100 is a yes. So I've got part 1 of the signal, but we need 2 parts of the signal. To get that second part, I'm going to go down and look at my majors and minors and see if they are if they are telling me the same thing this is telling me. When this is at minus 100, we don't think there's any more down in the movement. To see that there's no more down in the movement, I want the market to be oversold. I want these lines to be below this red line. It's not. So I don't have both conditions. Minus 100, nope. We're all up here. Minus 60 isn't close enough. Minus 83 isn't close enough. 0 is a yes. I've got part 1 of the signal, but I want all of my lines overbought, because that's going to tell me that the market's about to turn. Right now, they're all oversold, so I don't have both pieces of the signal. Let's go to the next 6. Minus 31 isn't close enough to 0 or minus 100. Minus 100 is minus 100, but again, I want my lines, majors and minors, to be oversold. I don't have that. Minus 50. Nope, not close enough. Minus 87 is kind of close. And we do have all the lines oversold. Minus 100, yes, but the lines aren't oversold, so that's a no. Minus 11 is kind of close, but the lines aren't overbought. So let's look to the next 6. Minus 73, no. Minus 57, no. Minus 87, no. It's close, but even if it was, we still have the lines in the middle of the channel. Minus 59, no. Minus 90, yes, but the lines are up here. Minus 32, no. This might be an interesting sell, euro yen. I know we're halfway into the channel, but that's all right. Down, down, up. So I got 3 of the 4 here. I've got red on top with rolling. So if I were to open up a new chart, that is euro yen. Euro yen. Let's take a look at what the full chart looks like. Save this guy. Chart settings. Euro yen. File, save as. Euro yen. I want to take a look at where the support and resistance is, but down, down, down. These guys are coming down, rolling, down pressure. Let's pull this guy in so we can kind of see the support and resistance. So I'm getting bouncing here, bouncing here, bouncing here, and here. I want to go one more below. And let's go one above. Bounced here, bounced here, bounced here. Let's pull it back out. So we're trading into an uptrend. We're sitting right on a resistance line. And this is a down trade. So I don't want to take a down trade when we're sitting on a resistance line. I want it to break through this resistance line before I take it. So I might keep an eye on this. And if he goes to about maybe about here, if he breaks through that line and goes through here, I could maybe take a I could take like a 9 pip down trade off of this. I'm not going to take the full distance because the full 19 pips, because we're trading into an uptrend. I don't want to trade against the trend, but I could probably get 9 pips. So on this hour, now we are on this side of the we are on, we're still sitting on this trend. So if he goes down and breaks this line, he's going to keep going. So I would take another trade there, or I would consider taking another trade there if he keeps going down. Okay, any questions? All right, terrific. Thank you for joining us. Next week, we will be starting another trade. It is going to be Thursday's Tip Top referral trade. It's going to be during the day at 11:30 Eastern Time. It will be run by me, Phil, John, and Eileen. And to get an invite to this trade, give us a referral for someone who tries the light program, and you'll get 60 days access. So just send me the email, and we'll take care of the rest of the details. Okay, very good. We will see you. We will see you next week. It looks like this guy is starting to push down and through. So if he does break this, I would consider this trade. We've got the nice 10-point setup, and just right quick before we go, we still have both of our trades hanging out there. So I would expect these trades to close sometime in the next 3 hours. Okay, very good. Thanks. Talk to you next week.